Welcome everybody. I'm excited to dive into the spring 2026 Philadelphia real estate market and really break down what's actually happening right now in the city. If you're an agent, if you're a buyer, if you're a seller, and most importantly, I want to talk about how it's impacting all of us right now. So the past couple of weeks, I've been diving deep through Bright MLS reports, showing data, what's actually going under contract. But I'm also paying attention to the bigger picture, the economy, interest rates, what's being talked about on the national headlines. And I'll be honest, if you're only talking about housing data right now to your clients, then you're missing the full story. The housing market does not operate on its own. Everything in real estate, it's all a chain reaction. So what I want to do is I want to walk through the dominoes that are actually in play right now: global conflict, energy prices, inflation, interest rates, consumer confidence, and how all of this is impacting whether people are actually making a move here in Philadelphia. Right now, the spring market is being dictated by things that have nothing to do with real estate and things that are out of our control. So we're going to break down what the numbers are actually saying, what's driving them, and what it means for you. My name is Andrew Polini. I am the team leader at Keller Williams & Power, the #1 real estate brokerage in Philadelphia by market share. And as of last week, I think I actually have this report up here somewhere, we were also recognized as a top 100 brokerage nationally by Real Trends and one of the top movers in the country by both sides and volume, which is pretty cool. It's a testament to our amazing agents, the best agents here in the city of Philadelphia. Congrats to you guys. So let's get this started and let's look at the numbers first. Fresh from Bright MLS. Let me pull this up. And we're going to start off with the leading indicator, which for me is always showing activity. Showings are down 10.5% year over year. This March, there were 25,000 showings in the city of Philadelphia compared to 28,000 showings last year. So the activity has decreased, but there is a small positive. Showing activity for the first week in April, which was last week, and they're actually really healthy numbers compared to the previous two in 2025 and 2024. So there are some signs of life out there. Let's look at inventory. Right now we have 4,900 homes for sale in the city of Philadelphia compared to 4,850 last year, so pretty much flat. Days on market this year, 58 days versus last year, 49. So things are taking longer to sell. Prices, this is where it gets interesting. The average sales price in the city of Philadelphia in 2026 is $270,000 compared to $260,000 last year. So we're up about 5%. And if you compare that to other large metros in the United States, that's a really, really great number. So if we just simplify all the data, less activity, showings are down. We have about the same number of options. Inventory is flat. There's slower movement. Homes are taking longer to sell, but prices are still going up. So per the numbers, that's the market right now. But what I want to talk about next is what's actually driving all of this, especially the slower activity. Because the spring market, this is supposed to be when things take off. And instead, it has been delayed here in the city of Philadelphia. If you remember back to just a couple months ago, we started off the year with 2 major snowstorms. Don't overlook that, because when they're still on the ground, people don't want to leave their house. They're not going to go on showings and they're not going to list their home. So there was a delay to the spring market. I know there's probably a joke in there about it freezing temporarily, but let's just move on. So we started the year off a little bit behind, but then the snow melted, the sun came out, and we got some really good news at the end of February. Rates dropped. We fell below 6% for the first time in a few years at the end of February. And that was a big moment because everyone felt like this is it. Buyers are coming back. Momentum is building. It's going to be a crazy year, and you can feel the energy shift. But a month later, rates are at 6.5. Right now, we're in the middle of April. and rates are at about 6.25. But I want to talk about what's happened over the past month and a half and why there was such a difference. And the answer is nothing relating to real estate caused that. This is where the dominoes started. So we all know about the conflict in the Middle East, but all of that immediately impacted oil prices and energy markets. So when energy prices go up, when gas prices go up, that feeds directly into inflation. And when inflation becomes a concern, the bond market reacts, the 10-year treasury rises, and that's when mortgage rates increase. So that drop below 6%, unfortunately, that was not a permanent shift. It was a small window. And then the reality of the global economy kicked back in. But now here's the part that matters the most. Rates don't just impact affordability, they impact behavior. So when there's volatility, when there's uncertainty, people begin to hesitate. When gas prices are up, when groceries are up, when there's headlines talking about war, people start to ask themselves, even if I can buy, should I buy right now? And that question alone is what slows the entire market down. That's what we're seeing right now. That's why showings are down. That's why buyers are taking longer. That's why homes are sitting longer, not because demand is gone, but because urgency is gone, at least temporarily. So here's where it gets really interesting, because even with all of that hesitation, like I mentioned, prices are still going up. And the question becomes, how is that even possible? So let's talk about that. The natural assumption is that when showings are down, when buyers are more selective, you would think that prices are coming down, but they are not. So there's three things that drive this. One, there's still not enough supply here in the city of Philadelphia. Even though inventory is slightly up compared to the past couple of years, we are still nowhere near a true oversupply market. And this is something that gets lost in the headlines, because if you zoom out, we're still well below pre-pandemic levels of inventory. There just aren't enough homes. Philadelphia is a landlocked city. We're between two rivers. There's just not enough homes for everybody. And when supply is tight, prices don't fall easily. Number two, sellers are locked into low rates. This is a big one. Over half of homeowners right now are sitting on mortgage rates under 4%. So think about that. If you're a seller and you're sitting on a 3% interest rate, why would you sell your home just to go buy something else at 6.25, 6.5? You wouldn't unless you absolutely had to. So what happens? People don't sell, inventory stays tight, and prices stay increasing. Simple supply and demand economics 101. And number three, the sellers that are listing, they don't have pressure. And I guess, honestly, the same thing can be said for buyers as well, because there's not as much competition. But this is something that we're seeing a lot of right now. A lot of people are waiting for this wave of distressed sellers. They're waiting for prices to drop. They're waiting for panic. They're waiting for forced sales. And that's just not happening. And the data is backing all that up. I just saw a report by Redfin that says only 8% of sellers that are listing right now are doing so because they can't afford their home anymore. That is not enough to improve inventory drastically. Unemployment is still in the low fours. People still have jobs. People are not distressed. People are not forced to sell. If you go back to 2008, unemployment was over 10%, and that's what caused a crash to the housing market. 4% is still a very healthy number for unemployment. Most sellers right now are choosing to sell, not being forced to sell. And that's important, because if a seller doesn't get their price, they don't have to sell. They'll just sit, they'll just pull the listing, or they'll just wait it out. Price reductions. There has been a rise in price reductions this year. Over 30% of homes on the market reduced their price, which is a big number. But to me, that also is a sign of mispricing. That's a sign that the seller or the agent misread the market or overpromised what they would be able to get. Homes are coming to the market to test it out and then adjusting to where they should have been priced in the first place. Homes that are priced correctly are still moving right now in Philadelphia. And that's why I believe that this is such a skill-focused market where pricing matters more than ever. What I'm seeing right now is two different markets in Philadelphia. Market one is where homes are priced right, they show well, they're in good locations, and these are moving. They're still getting attention, they're still getting offers, and sometimes they're still even getting multiple offers. Market two is the one that's struggling. Market two is overpriced, they're not showing well, they're the ones that are sitting and they're chasing the market. So although the numbers say that homes are taking longer to sell overall, I think the wrong homes are being exposed right now, and the wrong agents are being exposed as well, to be honest. Let's move on to opportunities. Where can we get a deal for buyers? If you're a buyer right now, this is actually one of the better opportunities that we've seen in a while, but only if you understand where to look. The opportunity is not the brand new listing. Those are still competitive, especially if they're priced right. And it's not the house that's been sitting forever. Those usually have bigger issues. The opportunity is right in the middle. It's that 20 to 40 day window. That's where you want to look if you're a buyer. That's where the sellers are thinking, maybe we missed it, maybe we need to adjust. That's where negotiation becomes real. If you're a seller, this is where strategy matters more than anything. You don't control the market anymore. You control your price, your presentation, your positioning. And the biggest thing I would be focused on right now is that first 2-week market. That's when you get the most exposure, the most attention, the best chance to create competition. I love what Keller and Zillow are doing right now, giving the sellers the opportunity to pre-market their home for up to 3 weeks on the biggest platform in real estate. If you want to learn more about that, just send me a message. But what I'm seeing far too often right now is sellers are starting too high and adjusting later. And by the time that they adjust, they've already lost momentum. So instead of creating demand, they're reacting to the market. So if I had to sum all this up, just based on what I'm seeing every day right now, this is not a bad market. This is not an easy market. The easy market was when you just threw it on the market, you got offers, boom, done, wash your hands, move on to the next one. This market is understand the data, understand the economy, price it right, move with strategy, because everything is more connected than ever before. And if you understand that, you can actually take advantage of this market instead of just sitting around and waiting for something that might not come. So that's all I got. If you got something out of this video, shoot me a follow, check me out on Instagram, and come to my social media con that I'm hosting on April 28th. I have some of the biggest names in Philadelphia real estate that are going to be breaking down their strategies on social media. It's going to be fun, or just show me some love in the comments below. But that's all I've got, and I will see you guys next time.